Good afternoon and welcome to the Blue Line Metals Edge here for Friday, August 5th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching this video on YouTube, be sure to like and subscribe to our videos. YouTube will send you a notification when a new video is launched. Also, I can see this week we've gained about 100 subscribers, so that's awesome. Our goal is to get to 5,000 subscribers by the end of the year, so be sure to like and subscribe. If you need additional research, go to our website, bluelinefutures.com. You can click on research and then register for a free 2-week trial. Just put your basic contact information in there. Select Morning Express. That's the one that covers all the macro markets you guys love. There are additional reports out there. The breakfast report covers lumber, sugar, things like that. And then the grains, obviously, grains have been a hot market here. It looks like some of those markets are coming down, so could be some good signals in there as well. Additionally, if you haven't seen the seasonal trends, I know that in mid-August there's actually a buy on gold that's worked out like 13 out of 15 years. So it might be something you might want to check out as well. Moving on here and looking at the research report that we're going to start to launch next week. We're kind of doing a soft launch right now on it. I'm outlining a few things here like the economic data releases. Today we had the jobs report come out. Big jobs report. Came out 528,000. They were only expecting 250,000 jobs. So it's making some impacts and some dents on a few different markets. Looking next week here, we do have a lot of inflation data coming out. You know, this is Wednesday, August 10th. We got CPI, core CPI. On the 11th, PPI, core PPI. Then you got University of Michigan consumer sentiment as well as some inflation expectations. Digging into the few of the markets here, like gold, for instance, kind of a bit disappointing here after that report came out. So if you watched the Metals Edge yesterday, like the last minute of it, I kind of outlined what was probably going to happen, and that's exactly what happened. The number came out, beat expectations. What happens immediately is you see that interest rate hike probability by the Fed just shoot through the roof, and then all the quants and everything have to adjust their models. So quite a volatile session here after that market coming out. Again, critical support zone way back down here. We don't want to see the market get back down there. It's a bad feeling when we get below 1,700 on gold, especially in this environment here. What you want to see is you want to see it close above this trend line here. This is this downward sloping line, and then also that 50-day moving average has been a key resistance level. So my recommendation, look to pick up some of the smaller contracts kind of in this zone right here, and then add more aggressively on a breakout here, as it should relate to a new extension upwards. Couple things that we're watching fundamentally, if there's any more tensions and escalation between the U.S. and China, that could really be a bad thing. We've already seen them indicate that they are putting additional sanctions on like Pelosi, some other leaders and things like that. And they've been doing quite a few war games here surrounding Taiwan. So one screw up on a missile and that could be quite devastating and really escalate things quite a bit. The dollar index shot up quite strong after that that non-farm payroll release. So, and then, recession expectations, those are back kind of in the cards. There's a lot of discussion about how the economy is going to be impacted, although they are really brushing it off with that better economic data coming out. Looking at silver here, again, 50-day moving average, key resistance. Look for some consolidation around this $20 level. We saw a big sell-off once that news came out of the non-farm payroll. And here, let me give you a kind of a more in-depth look or a quicker one. You can see that breakdown there. If you go to like a 5-minute chart, you can see right here, data release, they slammed that market down pretty good. Had a healthy recovery back because a lot of people are looking at the new trend on the metals, and there is a lot of bullish developments amongst all the precious metals. Like platinum, for instance, that's one that we're keeping an eye on. And go to the daily chart here. You'll see we probed and made a new high on platinum, actually breaking out. Took out the 50-day right there. It's continuing to move up. Stochastics, MACD are all turning up nicely. A lot of bullish fundamentals. You had back on here, you go to platinum, it was that Ford had come out and their auto sales had jumped significantly on the EV vehicles and regular vehicles. You also see in palladium, that's moving even higher here today. Big move. Now we're up about 15% off of that July low. Some things that we're working on, kind of behind the scenes is like a predictive algorithm as far as what the expected range was. Like if you look here today, the low on platinum was about 917, and here we go right here. Low on platinum about 917, top end is going to be 943. So you could see that this kind of nailed it. Expected upside target 942, expected downsides 916. What we're hoping to do is create this predictive kind of a trading range that we would see in a day. We would interconnect it into a report, like the report, the Tactical Insights report, and you would get that expected range every day. Now, when you do get volatility events like what we're seeing today, and you go to high beta markets, like things like silver that tend to move a bit more than something like gold, you would want to go out and you'd want to widen out that range. Where your normal expected range would be this 50-cent wide, you could see on volatility events you'd want to widen it out at least 1 to 2, 3 times out. So something we're still playing with. It's still in the cards. A couple funny things out there that I saw was on copper. Saw this story on Yahoo that nearly $500 million of copper went missing. Well, of course, that's going to be bullish for copper. We saw copper futures shoot up on that kind of news. Remember, the correlation between copper and silver is quite high, so that should be supportive for that. Also, platinum pushing on up should be supportive. So the metals are kind of getting the band back together and moving to the upside. Now, the biggest thing and the reason why we saw the sell-off in the equity markets today and all those markets get hit immediately, and I hope you guys are looking at this, you should definitely bookmark this particular page right here. It's the Fed Watch tool. And coming into, this is the September meeting that's coming up. It's got the target rate probabilities for the September 21st meeting. If you look at the beginning of the week, it was only a 50% or a 72% chance of a 50 basis point rate hike and a 28% of a 75 basis point. Now look, coming into today, it completely flipped. Now we've got a 70% chance of a 75 basis point rate hike and only about a 30% chance of that 50 basis points. So they got to adjust the models on it. That's why the markets get real squirrely after that. Also, the CME launched another tool that you guys should definitely bookmark, especially if you trade oil at all, is this OPEC watch tool, where it comes out and it talks about at the next meeting what's going to happen. Like it was maintain an output increase. Well, they did that slight increase there, and it pretty much nailed that. They only had a small probability that it would be a massive increase, or it would have been no change at all. So these are two tools that you definitely want to keep in your radar. So if you have any questions, I'll be updating some things over the weekend. Reach out to me, 312-858-7303. Remember, futures and options trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.